Hello all. You are welcome to our webinar. I am glad that you can all attend today. I want to thank all our investors for their continuous support and trust and welcome new and potential investors. Topic: How and why to invest in Ellington 5Mastery Fund. Remember our goal: become financially free using small starting capital. First, the disclaimer: it is not for everyone as lovely as this investment may be. Your remaining in this webinar means you agree to the risks and fully understand the risks. It is a regulatory requirement from the authorities that we explain this to you. For details, please see our website at 5mastery.com. Here is the schedule for today. Before focusing on that, I want you to reflect on this Chinese proverb. The best time to plant a tree was 20 years ago. The second best time is now. The best time to invest was 20 years ago. Based on your age group, I can see in this webinar, the next best time is now. Do not miss the opportunity to invest now. We divided this webinar into two parts. Part 1 will focus on why you should invest. After that, we break for the questions and answers session. Part 2 will focus on how you can invest. Then we have the second Q&A session. We expect this webinar to last for about 1 hour. Here are our senior team members. We want to acknowledge their incredible work that contributed to our success this year. We start from the CEO, Mrs. Eunice Adegoju, to our legal consultant, Mr. Orioi, including our finance consultant, Mr. Adetebi. There are, of course, other team members working hard behind the scenes that we do not have their faces here. We thank them all. We also recognize our partners from NAV Consulting, our fund administrator, to Zenith and BMO Harris Bank USA, our bankers. We recognize Deloitte's work as our auditor and the capable work of our legal service provider Webster O'Neill. We recognize the invaluable training we continue to receive from investment fund secrets, our hedge fund coaches and mentors. Our solid fund structure results from work spearheaded by Frank Nagy Financial Services. To anchor today's webinar is Sam Adegoju. Over to you, Sam.
Thank you very much on doing that recording. This is the structure of the fund, and it's very important that we explain this today. So this is the structure of this fund. Let's start with here. So this is what we know today, and this is what has been advertised to us. Ellington 5Mastery Limited. It used to be known as Ellington Nigeria Limited, but we recently changed the name. It's now called Ellington 5Mastery Limited. It's a company domiciled in Nigeria. Is the IP owner of this fund. IP meaning the intellectual property. It is what we have today for the growing number of investors, and it's the fund that we stop taking people. So the fund no longer continues to operate as a fund, but now is focusing on the technology, the investment strategy. It's also focusing on maintaining the automation and focusing on promoting the fund. These are the names of the directors in this company. In our promise to be transparent, we want to say as much as that. Then let's talk about the new players now. The first new player is 5Mastery Pty Limited. This is now the fund manager of the new venture. The new fund is Ellington 5Mastery BVI Limited, domiciled in the British Virgin Islands. So what is the fund manager? What's a fund? In a regulated fund environment, which we don't have in Nigeria, a fund has to have two different entities. The first one is this one, and that is the fund manager. So that's a company that we have domiciled in Australia. And then you have the fund itself, which is a different legal entity, and that is the one that is domiciled in the British Virgin Islands. Okay, so this fund manager is focusing on applying the strategy, applying the technology to manage this fund. And this fund manager licensed the technology from the Nigerian company and then manages this fund. These are the shareholders in the Australian company. And these are the shareholders in the BVI company. I want you to look at these shareholders here, other shareholders, all investors. As soon as you invest in the BVI fund, you also become a shareholder. That's one of the key difference between what we have today in Nigeria, because there's no regulatory framework. You become what is called an LP, a limited liability partner, which is also a shareholder in this fund. Now, the question is, why is this located in Australia and why is this located in the British Virgin Islands? That is how we decide to structure this to be able to get things going and do well. All right. Okay, just a moment. Just need to respond to a text here. And then we will keep going. So please put your question down and we'll come back to do this. Now, you will notice the name the Adegojus keep showing. So Adegojus are directors here, Adegojus are directors here, Adegojus are shareholders here. The Adegojus are Nigerian-born Dutch citizen with permanent resident in Australia. And we are currently located in the Netherlands and also in Australia so that we can focus on this company. One question that has been asked is, what is the risk of investing in a single family control fund? Well, there is risk because every business has its risk. But what we want to let you know is that we have other players that we've shown who are also contributing to this. But the fact is that the Adegojus are the core structure of this one. What really you need to have in mind is that a fund structure is different from any other company. A fund structure gives you the legal provision, that regulatory framework by the government. So it really doesn't matter where you have different player or the same player. What are these regulatory framework? The government regulators, so that's one. The second one is that we have a third party, which is NAV Consulting, we've talked about, who are also the fund administrators. We'll talk about some of this later, how you do that. Does this still mean there's no risk? There is risk, and we need to be transparent about this. Is what you need to discuss with your financial investors and all of that. Is it going to change in the future for the Adegojus to become a core of this company? Maybe. Will it change now? No. Why? We got burnt when we went out to partner with others in 2017. You've known that story where we ended up with 0.8 million euros loss. So we're a little bit very careful this time. But here's the challenge. You have a chance now to join us and start shaping that. As you join the BVI fund and you become part of the shareholder, then you can start to have a part in shaping the future of the fund. And I know there'll be questions on this later. Please write it down. We'll come to it and we will treat that as we go on. All right. So what are we telling you? What's our projection? What are we saying you can get? We're simply saying, if you invest 100,000, by year 10, you will come out with $3.1 million. And that is excluding the distributions we give you that you take out of it. And this is net of fees. Here's something I need you to look at. If you look at after year 2, you would have come up with about 100% return on your investment. So that is in about 2 years. You get about ×2. Between year 2 and year 7, which is about 4 years, or is it 5 years, you get times, so from the starting, you get ×7 return. But look at what happened between year 7 and year 10, which is also about 4 years. Then you get this significant difference, which is about 20. If my arithmetic is right, 24 times the difference. So 24 times here, and here you just get 5 times. So compound interest is like a hockey stick. You need to wait out this period, which our research shows is about 5 years. and then it's as if you are legally printing money. It takes patience. Does it mean you will not take from your investment on the end of the year? You will. This is just a projection. We'll be able to do that. But we just want to encourage you to take patience. So that's our planning. Are we meeting this plan? Yes, we are. And we'd like to talk about that. In looking at this, we want to look at our 2021 performance, which is one of the reasons why you should invest in this fund. In looking at that performance, we're going to look at the performance of one of our investment portfolios. So let me try to grab that and look at this portfolio here. Yes. So this is one of our investment portfolios that we are showing you here. Give me a thumb up that you can now see that I have switched from the PowerPoint slide and switched to showing an investment portfolio. Give me a thumbs up. Let me see your thumb up. Let me see your thumb up. I'm not seeing anyone. Yeah, I see something. Okay. Thank you very much for that. So this is the investment portfolio we have here. So you could see here, the balance of this client is 198,000. That is the balance. We call it 198,000 money. Why money? Because it's a portfolio made up of euro and dollars. So we just call it 198,000 money. You will also see that he has returned a gross profit of 87,216. That's the profit that has been returned. What is the total return so far? 162.1%. Please note, this is gross. 162.1%. How long did it take to return this? 435 days. Hang up a minute, Sam. This is not adding up. 87,212 is gross profit. 198,000 is balance. And then we are saying it's return 162%. No. 87,000 is not 162% of balance. The question is why? Here is the answer. When this client started, he did not start with all the money at once. In fact, it was a time when we were taking small money because it was our client number 2. He started with $20,000 and then he added money along the line. Because he did not start with all the money once, you should not use the closed profit as a percentage of the balance to judge the total return. What the system will calculate is how he's been adding money so far and how it's been returned. Give me a thumb up that you understand now why closed profit should not be seen as a percentage of the balance to look at total return. Why it's very important to look at how the money has come in along the line. Can I see your thumb up? Great, 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 great. So we therefore need to answer the question, how has this client return? Now that we know that it's not exactly just looking at the total return, how can we get some idea about how his return has been? We could do that by going into the history of his portfolio. Please, I'm not going to emphasize how to use this tool. I'm just going to emphasize the what. So we will not be saying how I got to this clicking. So we can go to the history of the portfolio. I click on stats there and it shows you a little bit more data. It's now saying that for this, our client, when he analyzed the return so far, is doing about 1.6% a week. This is a projection based on statistics. It's doing about 6.8% monthly. This is the projection based on statistics. 2.6% profit factor. And we've talked about this, and we've talked about this balance, and it shows this one. But we want to see how has this client investment been since it started. We can go into the monthly statistics. In this monthly statistics, you see more data. It answers the first question here. When did he start his investment? I want to get the answer from the public. Who's going to type it on the chat box? When did this client start his investment? We're just in this together. So let me make sure I can hear you. Where is the chat box? Please start there. October 2020. Brilliant. I have brilliant people in the house. Yes. So now we got that question. It started in October 2020. That's this year. Next question, how much did decline start with? How much money did decline start with? Note, opening balance is blank here, but you can work it out. He had a net profit in the first month, 701, and a closing balance of 20,701. So how much did this client start with? How much money? Type it in the chat box. How much money did he start with? Let's see the arithmetic. We'll send all of you back to high school. And then you're going to face your math teacher again. Some people dread that. Yes, thanks very much, Wenger. 20,000. So that's it. This tool does not write this. It's a third-party tool. We can't influence it. Doesn't write that. So it started with 20,000, and then it started to grow, as you could see here. And then the client start growing, 4.7% return, 4.5. It start to grow. It start to grow. I want you to note something here. Note something here. What is 08? August, thank you. August 2021, he made a return of 13,000. He had an opening balance of 60,000. But look at the closing balance, 132,000. That's not adding up. 13,000 plus 60,000 plus, that should be giving us 73,000. But he jumped to 132,000. Who can give me an idea what likely happened? August 2021. What likely happened? Give me an idea. Type it in the chat box. What did he do? Let's go. What happened? August 2021. Excellent. He added money. And you could see the system tracks that. So when you do take that difference, you really see that he went about doubling his account. Actually, he added very good money there in August. And then he started growing from there. So that means you can add to your investment. And that's why the calculation is the way it was the other time. So he started making some money and adding to that and adding to that. This is December 2021. We are virtually close for the year. This client made a gross return of 10,579 at 5.6%. Today is 18th of December. We have already achieved the 3% target that we say we do for investors. You could also see that in all of this, we met all the target of the 3%, bearing this month, we didn't make 3%. I think that is the only month. Oh, and this one, yeah. But if you look, this is our average return gross, 6.7. And if you take 80% of this, you see that we have beaten our 3% monthly estimate. So this is our performance. This is not humana. Some people have said maybe the things we are doing, is it really true? Now you can see it. You can see the data. Not only can you see the data, we could even do an expose and dig in more and try to say, maybe we are there just writing out the statistics. You are able to see, at least for the previous investment of those who do it with us, all the closed orders, the trading that made up this. You see that? All the trading that we did, you could see it. It's totaling about 44 pages. All the things that make up this, you'll be able to do that. Yeah? And let me be straight ahead on this. The platform in the BVI is not exactly like this, but we still promise to do as much transparency as possible. So that's our performance. We are doing and going beyond what we promise. But let's now look at how did we fare generally. So this is just one investor. You know, how did we fare generally? We'll be able to talk a little about this by going to our website and look at that. So you could always see our performance. We post it every week on our website. So that's the one you see here. This is our signature fund. This year, and Rotex, thanks for updating that this morning. This is our high performance return, net return 95.52. What does this mean? If you invest 100,000 with us on the high return on January 1, you will today have $195,520. It's as simple as that. That's what you get. Anybody not happy with this, you can find another investment, okay? We must be clear that we're showing this high return here. That's purely marketing. Our strategy is actually based on a couple of strategies which we try to optimize. So when you click, you can see the two main flagship strategies we're running between now. This is the high return, which we showed there. We also have what we call the legacy. Those who have attended our webinar before, we understand this generates more money. This takes a little bit easy on risk. And when we combine the two portfolios, we've ended the year with 64.99. Let me note, investors who have more than 100,000 are those who play in this. If you have less than 100, you play in only one. Or in the fund we are moving to, we'll play together. If anyone is not happy with 64% return, thank you very much. You may need to check your level. So that's it. This is our forecast. You could always see it on our website. That's an average of 3% a month. If you do the math, average of 3% a month compounded will give you about 41%. But you could see we didn't plan to return 3% every month because our statistics tells us that the month varies. But we've done well, except for February, where we had a loss overall. We've pretty done well with what we've done. So that's it. We're doing that. We're meeting what we say we'll do. We thank you for those who have the confidence in us. We're now going back to the PowerPoint slides. We talk about still why you need to invest with us. You need to do that. We're raising funds and we're going to project assets. So performance fee will go up over time. Our performance fee now is 20%. Once we hit 5 million in asset under management, it's going to go to 25%. So today we do 80-20. We're going to start doing 75-20. We're about $3 million as of today. And that's coming from less than 1 million 6 months ago. By our projection, before half of next year, we will hit our 5 million. When you come to join us that time, you'll be paying higher fee. That's why it's important to join us now. Next, we're going to increase our management fee, which is 0. As soon as we hit 5 million, we're going to increase it to 1%. Yeah. So you could read about what management fee is. We won't cover that in detail. And in the future, you could see it goes to 1.5 and it goes to 30%. Again, look at minimum investment. It's 100K now. Once we hit 5 million, it's going to go to 250,000. And once we cross 50 million, it's going to go to 500,000. At 100 million, thank you very much. We will no longer take investment at all. If you join us today, you have the opportunity to only pay 20% for the next 5 years. That's juicy and that's really good, which we think we should take advantage of. So we need to look at, in evaluating us, what is our competitors doing? You can see them. Yeah, so this is one of them here, Walker Capital. So let's see, because, you know, I always give example. In the place I live, there is a place further off that is called Groningen. And if you go into Groningen from Leichendam, where I live, and you say you are cycling there, I typically use example. If you don't know that it's 2.5 hours by train, and I say I'm cycling there, then you may not know how much I've cycled. But when you know it's 2.5 hours, then you know that, oh, I'm a great Dutch cyclist. So what is our competitors doing? How are they charging? So this is one of them, a very well-respected hedge fund based in Australia. I want you to look at the numbers. The currency they use is Australian dollars. Service fee, 2.2% management fee, Ellington 0. Performance fee, 22%. So already they are 2% more than us here, and here from 0, 2.2%. Management fee is charged on the total fund under management. So if we have 5 million, they pick 2.2% of that. The industry average is 2. They are 0.2% higher than that. I want you to take a look at the minimum investment, 500 Australian dollars. And what is the asset class? Same as us, Forex. This is good. For many, it's 1 million and above. There is another fund you hear about, one of the most successful in the world, They are called the Renaissance Fund. This is their website, Renaissance Fund. It's coming from the Medallion Group. They're one of the most successful hedge funds in the world. When you come to their website, this is what you see. You can't go anywhere. There's no information. There's no disclosure. Why? They stop taking investors. They just don't take. So take advantage of what we have now. Hedge funds who are successful don't go on forever. You need to log in. I got a feedback from some investors that our website is not fantastic. It's not professionally built. I take that, and we have recently commissioned someone to look at that. But really, we are not in the business of beautiful websites. It's about giving you the best of investment, because very soon our website will even be closed to the public. But again, keep the feedback coming and we'll continue to work on that. So we're getting close to half of the time. As you could see, the other ones listed here that we've talked about, Bridgewater Associates, you could see all that they are doing there. So more on why you should invest with us. I will soon get to the Q&A part. We make money. We've shown that. You are protected. It is regulated. I sent a news item to investors yesterday. It is a company that another company ran away with millions of dollars. They could do that because they are not properly following the regulation. I also got from one of my investors, a Nigerian guy who ran away with about 250 million or billion. As at today in the Nigerian fund, my wife and I, who both run this company, is the truth. We can run away with the money of investors because Nigeria is not a regulated environment in hedge fund, which is one of the reasons we move into BVI. In the BVI, that is not possible. NAF, that is licensed with the government, we make sure that doesn't happen, and they have access to a bank account. And they will be the one to take your money and give your money back to you when you want to get it. So if my wife and I must run away with your money in BVI, we have to bribe everyone in NAF. And if NAF could connive with us, then they lose their license and they jeopardize their business all over the world. Then Deloitte will have to explain to the government why they allow us to do that, and also the legal consultant that they are all licensed. So that's the protection you have, and also the safety. Because we have pool of funds, we're able to diversify better. We've talked about the bonus you can get on the management fee. For the next 1 year, we are not charging any expenses to the fund, just to help us to grow together. Then use this holiday period to move your money. We're already effectively closed for the year until January. So if you bring in money now, moving it, settling down, doing the paperwork, it means that you are not going to lose any investment returns. So that's a good one. Minimum is 100%. It will go up. We'll talk about that. But you are also supporting a noble cause to do others. Despite the disappointment we have that the Nigerian government cannot give us the regulatory framework, we still retain a company in Nigeria to be able to help the less privileged. We're paying school fees for kids that do not have parents or do not have privilege. We're supporting a lot. We're giving back. And that is something you could also contribute to by your investment. This opportunity will not last forever. Take advantage of it. Some people are wishing they bought Bitcoin when it first came out. That is our encouragement to you. So they are investors. Do you want to continue in a race like this? Or do you want to be like this? The choice is yours. We coach you to achieve financial freedom. We coach you to financial independence. And we are very confident that when you join us, you can achieve a lot in your life. We're going to pause here for the first Q&A. After this, we'll go into how you can invest with us. But we've just covered the why you should. You now have the floor. I'm now ready to take your questions. Let's focus on the first part. Okay. Oyin, do I have any questions already?
No, not yet. No.
All right. So let's get some questions, please. There's a special offer at the end of the webinar for those who stay. Okay, thank you very much. I get confused when I keep hearing that we should invest with us. Are we not investors already? The answer is no, you're not. You may be an investor in the existing Nigerian company, but in the BVI fund, you're not investors. You need to take the decision when and how you will join the BVI fund. So the focus of today's webinar is on the BVI fund. We have our investors in the house who are in the Nigerian fund, so today's focus is on the BVI fund. But again, you have a contract with us for about 2 years. You could have the option to remain that for the next 2 years. But you need to take a decision if you're going to join the BVI fund. Thanks very much for your question. Next question. So moving from the current Nigerian fund to BVI is not automatic because the regulatory framework and legality is different. Can you move funds from existing fund to BVI? The answer is yes, but you need to elect that you want to do that. And there will be clarity as we go on to the next session. You need to elect to do that. The paperwork you need to fill, the regulatory framework is different. And you need to qualify also to do that, as you'll find out later. Next question. Next question, next question, next question, next question. It looks like there are no more questions. So we're going to go to part 2. Part 2.
It looks like we have a question actually. Yeah.
When I joined the BVI, can you move funds from existing fund to BVI? Yes, you can.
No, I have a question.
Okay, go ahead.
Are there any license fees being paid by E5Mastery in Nigeria for the IP Forex platform?
No, there's no license fee. Can you read the question again?
Are there any license fees being paid by E5M to eNigeria for the IP Forex platform?
Oh, okay. I'm assuming that if your question is this, then the answer is yes. So if your question is this company paying for the IP that is using here, the answer is yes. It pays for licensing this IP. It pays for that. But is there any other fees? No. So for this fund pays 20% to this company, and this company, out of the 20% it makes, pays for the IP that is licensed from here. But that's an internal agreement between these two. And there's also internal agreement that is regulated between these two for the 20%. When it increases to 25, the license is renewed again. That's how the structure is. Wow, that's very smart question. I didn't expect that. Okay, it looks like we need to go to part 2 in view of time. We have 20 minutes left. We now go into part 2. Now we're covering how you can invest with us. Before we go fully into the house, let's look at the requirement. What is the requirement to invest in this fund? Minimum investment, $100,000 US or equivalents. You also declare that you are worth $1 million. It's just a declaration. They don't check. In some US states, they will have to check that outside your house. So you just declare that you are worth $100. One very nice way you do that is if you're a man, you go and marry a princess, and then you just worth $100. And if you're a woman, you just marry a prince, and then you do that. But this is just a declaration you tick off. You are not a US person. A US person is a US resident or a US citizen. These are the 3 requirements, okay? These are the 3 requirements. I often get the question, why 100,000? These 3 requirements are regulated. It's not set by Ellington. This is what the BVI government says. If you have to run a professional fee, you do that. But we dug in to get why. They want high net worth individuals. We made a terrible mistake in 2017. There was an 85-year-old woman that invested through us. She put in her head and 3,000 euros. When those guys defrauded us, she lost all her money. I was pained in the heart, so was my wife. The government doesn't want that. She's going to park all the money in her house to invest. The government doesn't want that. So the government feeling is that for people who invest 100,000, then they have enough that if there's any issue, it doesn't seriously affect from their life. I'm happy to let you know that last month, based on our humanitarian exercise, we went back to that 85-year-old woman, refunded her money fully, but purely on humanitarian ground because we're really happy with the blessings we've got this year. Yeah, it's not part of what we should do, but that's one of our mistakes of the past also because things were not regulated. So that is the main reason for this one. And all of this that you see here. US person, well, I don't know the problem they have with the US, but that's the law, that is the rule. I've given you a website here where you can see where this regulatory framework is. So later you could do that if you watch this video back. You see it in this website, is well written there, what the requirement is. You see it here. So here it is, and you can go back to look at that. So that is it. A professional fund is the most popular. It's aimed at high net worth professional individual, and the minimum initial investment by each investor other than a registered investor is $100,000. So that's what you have there. And you can read more and more and more and more about this. So it's not set by us, it is government regulation. In which it can be lower, but that's not the case at this point in time. Now, having seen the requirement now, we then come to the next question, which is, hey, how can we invest? The easy answer, register, fill the form, wire $100,000. Yeah, that's the easy one or more. Okay, so that's easy. We just wire that form. We don't need to talk about this. What if I don't have 100,000? What if I don't have? There are some things you could do. We call this one collaboration. You get together with friends and you invest. It says person. The legal definition of person does not mean it has to be one person. It can be a group of you. So a group of you can come together, get up to 100,000 and you invest. You can do that. We've seen example of that. Two clients here, actually, they've been able to bundle together to make up the 50,000 that we did, and they've been succeeded in that. I want to show you an example of one of the clients who bundled together, because even when you bundle together, we're still able to give you an aggregate of what your own delivery is about. And I'm very proud to mention here, Chief Madam Mrs. Kemi. Yeah, thank you very much. You are a firm promoter of this strategy. And I want to also shout out to Sumbo, who also was able to gallantly be able to do something about this here. And I want to show you her portfolio. She was able to pull some other people together. So even when you pull people together, I'm looking for Bosch. Yeah, that's it. When you pull people together, you could still have your own segregated within that pool. We are still able to segregate your people. But we see you as a single entity. We don't want to deal with all of you as one person. So this is the portfolio of one of the people who bundled together, but I'm just showing you the segregated one there. So she has 14,000 now, and look, she's returned 1,187. How long? How long is this? Check it out. How long? Last month. She started in November, 6.6% return. And in this December, she's had 6.1% return. So again, if you go into how it's come about this, and you go into the monthly one, you will see again, she actually started with 9,100 euros. She made 602. This month, she added 4,200 and she's made 584. She's starting her life to financial freedom. You can do the same, but let me be very clear. We don't participate in this bundling together. You need to pull the friends and others together yourself. And then you go to NAF, our fund administrator, you fill the form, all of you declare, and it's going to come from a single bank account. So you need to work with friends. That's why we put it with friends here. Don't work with people who will take away your money and run away. But you could pull together. So 5 of you could do 20,000, make 100,000. We will still be able to give you your own contribution within that pool. Let me be clear. I want to show you an example of that. Okay? I want to show you an example of what we call by that segregation that we talked about, so you can understand it, because we want to be transparent in Ellington, even when you bundle together, as we say in my language. If you and your father have the same farm, there should still be boundary. Yeah? Okay? So this is a single portfolio here. You can see it. So this is a single portfolio. Within that portfolio, there are different accounts. At Ellington, we deal with all of these as a single entity, but we are still able to say, this is for Ejiro, this is for, give me a name. Give me a name, Onyi. This is for Onyi. I'm looking at, this is for Dami, and this is for Alexis. Okay? So we still separate that, but we deal with you as a single entity. All that you still need to meet is 100,000. So that is the legal loophole that we are letting you know. Why are we telling you this? Because we appreciate that we want to touch the life of so many people. And this 100,000 is a barrier, especially where we come from Nigeria. Our Naira is sick, he's been in the hospital, they've been doing lots of treatment. He's not recovering. So many middle class can meet 100,000, but not at the beginning, but they can grow into it. And we want to support you to get there. But you need to collaborate, you need to work together. Another thing you could do is the next one here, an entity. You can form a company, and then you pool funds together within that company and come as a single entity. What's the difference between this one and this one? This one is friends getting together. You are all individuals, you pool together. This one, you form a company, and all of you contribute to the pot of that company, and you come to invest. That's also allowed to do that. This takes a little bit of more administrative work because you have to form the company. You have to do your memorandum of association. This is actually what we would recommend because you have better protection as you learn webinars later. Finally, you could become a fund promoter. The promoter of a fund is exempted from 100,000 because you are promoting the fund. To do this, you could write to us later and we'll go into the detail. When you attend a training, you qualify to be able to market this product. We pay you 1% of everybody you bring in, and you go through a training, we qualify you, and we have an agreement signed with you that we allow you to be able to invest less than 100,000. How did we come about all of this? We just tried to study the legal loophole, which is that website we gave you the other time. Take a look at it, you will see it there. This is one of the things you'll find out from it. It gives you all of that, the exemptions. So an exempted investor. An exempted investor is a promoter of the fund, or like us. So I have Onyi now, who invested in the BVI fund, because he happened to be the staff of 5Mastery, which is the Australian company. She's also allowed to invest. The question is why? The reason is that the government believes that the fund promoter and the fund manager and their staff, they understand the risk. So it's not like grandmother bringing all their money, and that's why they have that. So ladies and gentlemen, you have your chance there, and that's the thing we are highlighting to you. So what do you get when you invest? You get your document, you sign the document, and then you get the training that we're inviting you. You can have one-on-one coaching, and we'll be able to do a lot. We just work with one of our existing investors, for example. He no longer pays a mortgage. This investment that he has with us now pays for his mortgage because he came to us and we discuss and we look at opportunities can do. Please, all our existing investors, you could always book a one-to-one with us and discuss. And this is where you do that. http://5mastery. Okay, if you take that website and you book, you will be able to book a one-to-one for 30 minutes to work with us. Yeah, https calendly.com 5Mastery. You'll be able to do that, and oops, we can help you. We come to the final lap. Let's take your questions. The bonus offer today. If you go to this website and you register and you write the amount of, this is please for our non-existing investors in the Nigerian fund, and you put the money you want to invest here, Ellington, just for today, we help you collaborate by grouping all of you together to make up 100K to be able to invest. Here's what I mean. Let's say you have 30K you can start with. Another one has 20K. Go to this place now, put in what you can do. We will help you coordinate this just for a one-off, all of you into a pool, and you will be heading to the BVI. Today, give you now to collaborate with others, but you need to do it today. Go to that website, it says 100,000. Type in whatever you can do. We will help you pool all of you together. You now no longer have an excuse that you don't have 100,000. This chance will not go beyond today. Time for questions. Okay, what do I have in the question box?
It says, is it okay to withdraw profits to US bank accounts from the BVI?
Yes, it's okay. You can withdraw it in the US bank account. When you fill your form, it will ask you where's your money going to come from and where will you be taking your profits to. Make sure you fill it in the form. It's okay to do that. Next question. Apart from the documentation needed to start a company, are there any other downside when compared to friends and family? No. Actually, based on the training we give you, we recommend that you become a company. If you invest as a company, you have more leeway. There's nothing more. It's just easier to be a company. Thank you. Next one. And we can assist you in that through our lawyers. We can link you up to be able to help you to do some of these exercises. We're happy to support you. Okay, you may have to pay for it, but at least you're getting the best, and you can get discount from that. When I join the BVI, will I become auto shareholders? Yes, you become an LP, a limited partner. Next question. Is it clear? Can the company domicile in any country? Yes, it can, except the United States. Any country except the United States. And what happens if you are US citizen and residing in the US? Write to us privately. You can't join the BVI fund, but write to us privately. We probably can find what we can do with you, but you cannot join the BVI fund. Can we invest with Naira? No, you cannot. You cannot invest with Naira. We are actually not a Nigerian fund, so it is US dollars.
Yes, I have a question that says, what taxes are paid to the BVI if funds are withdrawn?
Zero. There is no tax in your fund in the British Virgin Islands, but talk to your tax investor. It's one of the advantages of investing in BVI. You pay no tax, zero tax, nada. But talk to your tax consultant. It may just happen when you pull out the money back to your country. For that money you pull, you may pay tax on that depending on the jurisdiction you are. But as long as your money is here in the BVI, you pay no tax. I see a question on LP. What is the benefit of becoming an LP? It's not about benefit. That is the regulation. Okay? The regulation is that investors need to have a say in the company so that my wife and I just doesn't do what we like. So it's a regulation. Okay? How can you help current investors become BVI investors, considering we have been part of us taking the next level? We're happy to help you, but we will not disclose all of that here since we have our own mode of communication. Be assured we have a plan to be able to help you, but that is not necessary for this audience since we have non-investors. We'll reach out to you separately on that. But we want to take you. You just need to say yes, and we'll work with you to get there. Very, very good. Next one. Let's keep it coming. We have 2 minutes to go.
And I just want to add to the fact that if you have friends, you have colleagues, you have people you need us to pitch to, you are feel free to let us know. We can speak to them on your behalf. You don't have to tell them anything. You can arrange time with us so that we can speak or pitch to them just as we're doing today.
Thank you, my CEO. In closing, I'm going to say this. We had a long debate in our annual general meeting that we had 3 weeks ago. The debate was, should we stop taking investors? We have enough money to trade for ourselves as a family. We have some investors already where our asset has now grown to about 3 million. Can we stop? We decided to continue because we feel that we want to give back to the community. We look forward to you to take advantage of this opportunity and also invite others to be able to do that. Yeah. So that is the thing. Please invite others. I joined late and may not be able to join the evening